Joining us now to preview the stock, John Ransom is Managing Director of Healthcare Equity Research at Raymond James. John, it's good to see you. And first of all, healthcare is not exactly a cyclical type of trade. So we don't look to UnitedHealthcare maybe as a bellwether or as a tell for the rest of the space, or do we? What's at stake here?
This group, the difference between the volatility in earnings and the volatility in stock price is quite remarkable. UnitedHealthcare never misses. So you can dial in 13 to 16% EPS growth for the next 3 years, and they really won't miss that. Very unlikely. But what is volatile is the price that people decide to pay for it. That jumps around quite a bit. And what we found is that we think investors generally overreact to regulatory fears. And when they drive the multiple down, that's the time to buy it. So we, as you know, we upgraded it last week because there were some perceived regulatory fears in Medicare Advantage that got a lot better. And so that was a clearing event. And this is frankly one less thing for people to worry about.
Sure. So, I can't help but think when I listen to the certainty about it, that must be the end of the certainty. That this Friday they're going to miss or something, right? How long can trends and streaks like this really continue? Or is that what happens if you're effectively, a government utility to some extent?
Well, we did this analysis a couple of years ago, and we calculated that 90% of the growth in United is either the 4% from capital deployment, either M&A or share buybacks or a combination. And the other part comes from Medicare Advantage. So if UnitedHealth is going to get in trouble, it's going to be because they miss in Medicare Advantage for some reason, or the government moves their cheese. But absent those two facts, that's 90% of the story. And they're just coming off a year where they spent $21 billion in M&A, and that's going to be a cold spring probably for 24 and beyond. And then, like I said, we did have some concerns about Medicare Advantage rulemaking, but the rules got better than what was feared when the stock was troughing.
I don't think many people know that UnitedHealth is the third largest Dow component. I don't think many people understand that its price in the 500s, in that price-weighted index, gives it incredible influence on what the Dow does in any given day. I'd like to hear you comment about that, number one. And number two, answer a kind of sophomore economics question or finance question. Is this a stock that might split?
I don't think professional investors spend a ton of time thinking about the Dow because it is price-weighted. There's not a lot of money indexed to it. So they spend a lot more time thinking about the S&P than the Dow. So I'll leave that to people who focus on the Dow. In terms of a price split, I think that's actually a good idea because, at the margin, you could get more retail interest if the stock was, 10 times lower than it is today. So, yeah, it is. As weird as it is hard to think in terms of $30 in earnings and $500 in stock price. People would much rather think about $100 stock price, and numbers that are 1/4 or 1/5 that size. So I think that's actually a good thought. We have not heard anything about that from the company, but it wouldn't surprise us.